Good morning, everyone, and welcome to TradeStation's Morning Market Briefing on November 21st, 2018. I'm Don Prattle from TradeStation, and with us this morning is Bennett McDowell of TradersCoach.com. There's Bennett. Hey, so everything we're going to talk about here is for educational purposes only. All the symbols, all the trading ideas, and everything we discuss are for demonstration purposes. They are not recommendations. Our presentation is not an offer or a solicitation of any kind anywhere where a TradeStation affiliate is not authorized to do business. Remember that active trading is not suitable for everyone, and options trading carries a high degree of risk and may not be suitable for everybody. I've posted in the chat panel those important disclosure documents. I ask that you take some time and look at those at your convenience. In my notebook this morning, we don't have a lot to be thankful for. It seems as though our gains, the market gains from 2018 have been kind of flattened out, but at least this morning, stock index futures are pointing to a rebound at the opening. The U.S. stock futures are making some modest gains in the pre-market, in the overnight markets. With Tuesday's losses, the Dow and the S&P 500 are lower for 2018, with the S&P and the NASDAQ are now sitting in correction territory. I know Ben has a few things to say about that. Just a few minutes ago, the government came out with durable goods orders and weekly initial jobless claims. We'll post those in the chat panel when we can ascertain those. Deere & Company is the only earnings report of note out this morning, while there are no earnings reports scheduled for after today's closing bell. Here's just a small note. We will not be hosting the morning market briefing on Friday, and certainly not tomorrow either. So this is the end of the week for us here at the morning briefing. I hope that you all enjoy your Thanksgiving holiday. One more, just a couple more things about the overnight news. Crude is recovering. Crude oil futures are recovering. Some of yesterday's plunge in the overnight markets and early this morning, the West Texas Intermediate for January delivery trading at 54.25 after some industry data showed that the U.S. crude inventories fell last week. OPEC and their allies meet in Vienna next month to discuss oil production cuts in order to stabilize prices. The problem of U.S. output looms ever larger for the global crude market. Next year, producers in the Permian Basin expect to iron out distribution snags with 3 new pipelines, which will have the potential to add as much as 2 million barrels a day of output. With many wells in the area profitable at $30 a barrel, any move by OPEC to raise prices could be a strategic advantage for the American producers. Bennett McDowell, our presenter this morning, is the founder of TradersCoach.com, which provides education for traders in all markets, all time frames, and at all levels. Ben is an expert in technical analysis and has developed the applied reality trading entry exit software used by traders in over 50 countries worldwide. He has written 3 best-selling trading books, and he's with us every Wednesday to help us preview the markets for the day. I want to turn things over to Bennett right now for the morning briefing. Thanks for coming to TradeStation today.
Me a message, everything is good, excellent. Don's going to let me know as well. Sometimes I scroll around the chat area, so if I lose volume and you let me know, I don't always see it. So that's why it's important for Don to let me know as well. All right, well, let me put up my link here first. This is for the free report today. This is a summary report. Before I get started, I want to wish everybody a very happy and safe Thanksgiving. If you're doing any traveling, be extra careful out there on the roads, okay? Looks like it's pretty cold in the Northeast, so bundle up, speak, okay? But have a great one. That's the main thing. All right, lot to talk about today. Don did a great job on his notebook there discussing some of the important aspects. I'm just going to elaborate on that a little bit. In terms of actual announcements today, we got NBA applications coming out, durable goods. It's kind of a busy day today on the economic front. Jobless claims coming out, consumer sentiment coming out. Is it existing home sales, which is lagging a little bit these days, leading indicators, EIA petroleum status coming out, and the natural gas report coming out. Tomorrow, a of course, nothing coming out, Thanksgiving. And then Friday, a Fed balance sheet, and that's it for the remainder of the week. So, except for today, pretty quiet week coming up. Now, the market's been quite difficult, especially for position traders over the last, I would say, several weeks to a couple months here, because it's been going back and forth. So let's take a look at the charts. Before I do, just a quick announcement. When we look at charts, you're going to see some software tools that I use that you may not be familiar with. These are proprietary software tools. However, we do have them available for TradeStation. Go to our website and check them out. Art, Al, PTF, and TLM, and the ERI is what we call them. So you're going to see me use them on charts, and as I use them, you'll understand a little bit more how they work. But if you want to learn more about them, again, go to our website, or at the back of the report, there is an area where you can actually go to some videos and so forth on them. I also use Elliott Wave. I'm a big believer in Elliott Wave, as well as fib extensions and retracements. All right, let's dive in. This chart was actually of the Dow Jones Industrial Average on Sunday. I draw these for our exclusive More subscribers, and I'm going to show you the current chart, which includes Monday and Tuesday's activity, in just a moment. But let's go over this chart and show you what I got here. All right, it's not much different, obviously, than what I've showed you previously. We're still watching this very important key level of support here at 23,997.21. This was a level of support that was put in way back here over the summer during this low here. The market marched up. This is an important level. As long as prices, and so far they've stayed above this key level of support, this correction, even though it's been volatile, is considered a minor correction still in an ongoing Elliott Wave 3, which is what these numbers mean up here. The reason I have them set up where there's 2 3s here is that if we go below this level of support like this, then that means that Wave 3 is done. And we're going to put a circle around it indicating it's a solid completed Wave 3. If prices do not do that, but instead continue on up and make new highs, then we're going to get rid of this 3 and this 5 here and this arrow, and we're still just going to have a 3 in progress. So that's why we have 2 3s there. Now, the other thing that may be confusing you a little bit is you have some other numbers on here. You have a 3 minor, 4 minor, and 5 minor. Those are the waves that make up Wave 3. So in Elliott Wave analysis, there's always symmetry. There's always waves inside a wave. And sometimes you can see them, and sometimes you can't. Sometimes you have to go to a lower time frame to see those. But we see those here. Now, before I leave you here, we are going to look at the 60-minute chart. This is the daily, and take a look at the Dow on that time frame. And on the 60, you're going to see these 3, 4, and 5s as primary waves, not minors, because it's a different time frame. We do have bearish momentum. That's what this is telling us down here on the OWL. As of Sunday, though, the PTF, which indicates more highs or more lows with probability, is neutral. All right, so there wasn't enough momentum during these particular spikes here to really keep them at that particular point a solid color. So right now that's neutral. That's all you need to know. So that's what the Dow is looking like currently on the daily chart. Now, let's go over real quick and just take a look at the 60-minute, and then we're going to look at the live charts that include data from this week. All right, so on the 60-minute, those minors, 3, 4, and 5s, you can all see as primary waves. And the significance of this chart is, again, we bring over the key level of support that you can see we're above, but the significance of it is that we can use fib extensions to determine our Wave 5 target zone on this time frame, which is here. And that Wave 5 target zone is between 27,097 roughly and 29,473. So as of the forecast remains now, as long as this pullback remains above the key level of support, then we're technically considered in a trend, a Wave 5 on this time frame going up to the high probability target zone. Now, what's significant about the high probability target zone of Wave 5 here is that when we get to the end of 5, then that is also going to be the end of Wave 3 on the daily chart that I showed you before. So there are 5 waves inside an impulsive wave like Elliott wave 3. So when we get to the top of wave 5 on this time frame, that will also be the end of wave 3 on the daily chart. Let's go back to that daily chart just for a moment and take a look here. And you'll see the 3 here with the 5s in here. And so if we get to the top of 5, then we'll be at the top of 3. Now what happens after 3? Well, then we have a more significant correction called a wave 4. And when we get to that, we'll talk about it. We're not there yet. But if we go below this key level of support, then chances are we're entering that more significant breakdown in the markets would be a wave 4. All right, so that's where we stand. Now, before we start looking at stocks and stuff, I just want to go now and look at the live markets. Okay, this is the actual market for the Dow Jones on the daily chart. But this includes Monday and Tuesday's activity, and you can see the activity right here. Okay, so we're still so far above the key level of support, though we've come down. Now we have, as Don said, a bullish futures at the open, so we're probably going to get a spring to the upside. So I would anticipate, we'll see how that long lasts. Excuse me, but it's really imperative that we stay above this key level of support. So I want everybody, when they start looking at the markets on Friday, as well as early next week before we meet again, keep an eye on this key level of support. Download that free report I put up there, and you'll see copies of these charts with the support level in there. All right, next thing I want to take a look is really quickly is the S&P E-mini on a very short-term time frame here. This is the 10-minute and the 2-minute on the left, and you can see that we have some gapping going on based on the activity for the pre-market data. And that's kind of encouraging. We have a green PTF here. Everything seems to be green here. So we're probably going to go higher at the markets at the open. So that's what this is agreeing with. We've had a beautiful, long, very profitable downtrend here, but now today is a new day. So it looks like we're springing up at this particular point. So if you're day trading the morning, you want to be looking for long trades, not short trades this morning. That doesn't mean by noon it can't be different, but for the immediate open, that's the way it looks like. And just from a statistical standpoint, usually the day before a vacation, or especially when it's Thanksgiving or Christmas and so forth, the markets are usually somewhat bullish. All right, now, one other thing, I want to take a look at the Forex market here. I know some people trade the Forex, and I want you to pay attention to the chart in the middle. Now, notice I have 3 charts. When we look at stocks and ETFs and so forth, you're going to see the 3 charts set up on my workstation in TradeStation. And what I do here is I look at the 60-minute, the daily, and the weekly. And the 60s on the left, weeklies on the right, dailies in the center. And on the Forex market, this is the Euro USD. It's heading down into this target zone here. Let me grab my marker here. All right, so this is a 5 down here, a 4. So we're in a bearish wave 5 move to the downside. We anticipate it getting down to 1.03 down to possibly 0.897. So that's where we think it's heading into this target range here. If there's any Forex folks or people in the currency. Notice that on the 60-minute chart, we've got a red PTF. So after this thing goes down, all right, into the target zone, we should see a turnaround into the market because we have a green PTF on the weekly chart. Now, let's roll over really quickly. How many people are scanning the markets for stock setups using TradeStation's radar screen? If you're not, get it. All right. I don't see how anybody can find stock opportunities from a technical standpoint without having something like radar screen. We have 3 scanners that I've developed here for radar screen. One's called the Trade Confirmer. Phenomenal, okay, scanner. This is how we find our stock picks and so forth. We set it up on the time frame we're interested in. So if it's set up for daily, these are stocks I'm looking for a position trade. We also have an Elliott wave scanner here and the turbo scanner here as well. But this is how we find our stocks. So radar screen is an integral part of our trading arsenal because it allows us to sort through the thousands and thousands of stocks and ETFs or markets, whatever you trade, whether it's futures or even just Forex or whatever. You can set it up here on radar screen. It's great. We also do it for our swing trades on the 60-minute. You can see the interval here for 60. We have the trade confirmer here. Give that a second to load on your end and you'll see it. But also here, this is another area where we're using it to find our trades. So tremendous tool as a TradeStation user. You get it, so use it. Okay, it's really, really great. And you can set it up so you have a couple charts on one workstation along with radar screen running. You just click on the particular symbol and it will automatically, you can set it up to automatically load a particular stock in which you clicked on. So really super platform, and this is how we have ours set up. All right, stocks. Let's go ahead and go down the gamut of stocks that you all want to look at. Type them in caps. Everybody's been doing that. So let's get ahead and take a look at UNG first. This is the ETF for natural gas. So let's take a look at that. It's really, really done well over the last several weeks, as you can certainly see. You know, the interesting thing about markets, and one thing that I always like to share with folks, is that you don't want to get in late on a market. The key to successful trading, I think, is getting in as early as you can. The next question is, how do you find those markets that have not yet taken off yet, but at the same time, you're there when they do? All right. This is where radar screen can really come in and play an important role, because one of the things that we scan for is channeling markets. Okay, markets that are pretty dormant. And I'm circling these dormant areas really on all three of these time frames here. And so if you're ready to go, all right, you can catch these large swings like this. And notice we have, you know, green, green. These are some of our filters that we use. So we use those in conjunction with the ART system to time these types of markets. And this is an excellent market. It's in a wave 3 at this particular point on both the daily at this point and really on the 60-minute too. And it looks like we're going to get some more highs. So this is probably a minor pullback that we're in now. And after this, we'll spring higher. So this is still in wave 3 at this point. Now, ideally, this would have been the place to get in down here, right? Okay. So any trade here, all right, you're getting in late and it carries more risk. So you got to be a little bit careful about where you put your stop. Too close and you could get stopped out on just a normal minor correction. So you got to be careful here. So this is going to make more highs. If you're going to go in, probably a stop under this level in the 60-minute would be good. But then again, when you get to the top of the threes on both these time frames, you're going to have a more significant pullback, eventually leading, depending on how high this goes, probably into around the $30 price mark at some point, maybe a little bit lower, but then more highs after that. So again, very bullish on natural gas right now. But again, the ideal entry would have been earlier. All right. Thank you, Albert, for sharing that with us. All right. EMN is the next one. And this is for Karen. All right. Let's take a look at this. Give that a second. A little bit of lag time here, but we have not lost audio. So I'm happy about that. All right. Let's see what we got cooking here. All right, give me 1 second. That should be loaded by then. All right, first thing I like to look at here is the PTF. And the PTF is this indicator. Let me mark it on the chart. That's this one. I'm going to do that one with a check mark. And notice right away the PTF is red on all time frames. That means there's a high probability that the bottom that was put in on all these time frames, wherever it is, okay, I've just marked it, is not the final bottom. So we're still moving down. Great short trade, by the way. Hopefully a lot of people got in on this one. All right, regardless of the time frame. If you got in on a 60-minute time frame, which is the one over here, chances are you're going to be in these trades anywhere from 2 days to maybe a week or two if you're lucky. The better the trade, the longer you stay in. Okay, so you would have been in here but out here. All right, if you're on a daily chart position trading, all right, you'd still be short. All right, your stop would be right above here. Okay. Now, it's going lower, all right, so you don't want to be too anxious about getting out, and I'd stay with the trade until it reaches a bottom here. If this owl goes green, then this is a 4, and then you can use your fib extensions to figure out wave 5, all right, that's simple. Great stuff. That's a great one to look at. Hopefully, again, I think this is too late for anybody to go short at this point, really, unless you're going to use the 60-minute chart and catch the remainder of wave 5. But if you got in earlier, it's a great one. Okay. All right, let's take a look at BBY and give that a second to load. So far, the 60-minute I see is loading here. This is Best Buy, of course. And okay, 60-minute is showing that we have more lows coming. All right, the low that was popped in here is not the final low. We have negative momentum, all right, on all time frames. And we have a yellow PTF here on the daily and the weekly. So what this looks like to me is an area where not yet quite ready to go long yet. So here's where having multiple time frames like this becomes really crucial, because a lot of folks would say, okay, I'm going to look at the daily, which is this one here. We've had a nice move to the bottom. Okay, this could be a major bottom. I'll think about going long. The PTF's yellow. So on this time frame, there was not enough momentum to keep that red. So pretty close to thinking about going long. The only thing that's against me here, which is significant, is a red colored owl, which means the momentum is still negative. However, when analyzing the 60-minute chart on the left, this tells me a red PTF, which means that this is not the low. So even if this pops up and gets a little more bullish here on the daily, I still don't want to go long as long as the PTF is red on the 60-minute chart. This is the significance of knowing how to use your trading tools. Really important. And when you use multiple time frames, the way I have it set up here on TradeStation, it's a real gold mine, because I can take a look at 3 time frames at one glance, take a look at the tools, and really in 10 seconds or less know if I should be long, short, or out of the market. All right, really, really good. All right, Don's saying that audio is great today. That's what I like to hear. Hopefully it'll stay that way, even though we just have 4 minutes left. All right, let's go to IWM and take a look at that one. And let's see who this is for. This is for Albert. All right. Give that a second to load on your end, Albert. Okay, interesting stuff going on here. All right. The longer term time frames are bearish. We've had a huge move down here. Okay, 3, 4. This is showing that we're going to eventually get above here. So we're probably getting down towards the bottom of 5 here, right there. So, you know, in this case here, we drawn in the fib retracements. This was a 3, 4, 5. This is a fib retracement, these blue lines here on the daily chart for wave 4. And we have a red PTF. So actually a little bit lower, okay, here and here before the thing turns around. Okay, so I would not go long yet. And technically the art system still has a short. So, and you still got red over here. So I'd be a little bit hesitant of going long. We're almost there. The chance to go long is almost there, but not quite. So we're in a wave 4 on the weekly. This is, of course, the Russell. All right. Let's take a look at TDOC. Give that a second to load. I got to look over here and make sure you guys can see it. And I think we're good. Okay. So on TDC 60-minute chart, red PTF, red owl, still heading down. Do not go long on this with a red PTF, especially on the 60. If you look on the weekly here, we're in a wave 4 correction. Looks like we're going into that here at this particular point. And these lows here and here, okay, are not the final lows yet on the daily and 60. So if you're looking to basically go long on this, I'd put this on a watch list. I think it's close, but not ready quite yet. All right, that's TDOC. All right, we got a couple minutes left, so let's keep going on. AAPL, Apple for BW. And also Paul, I see you wanted to look at that one too, so that's good. All right, so I'm going to try to hurry through these because we've got just a few more, and I think we're good to go. All right, so Apple, red PTF, red pyramids. That's when I say a pyramid, that's these triangles up here indicating short positions. All right, so red pyramids and very bearishness on the short-term chart. So going lower, okay? On the daily chart here, we are definitely heading lower as well. The pyramids have already had you short for quite some time. And notice here, okay, we've got a fear bar occurring here. This is what we call our ERI indicator, the emotional reader index. So it's got a fear bar here, so it'll be interesting. This is a signal bar. It'll be interesting to see what the markets do, okay, with that price bar. In other words, if they break below the low, the fear continues. If they break above the top, then you're going to have 2 to 5 days of bullishness based on the fact that the fear bar was exceeded. All right, so bearish on this. Don't buy into Apple right yet. All right, let's keep moving on. Let's do USO, because you're going to hear a lot about oil. And this is the ETF. This is for Chris on oil. And I'm going to do try to do a couple more here. So on this one here, market just opened. So Don, I won't go too much longer. All right, you can certainly see oil sliding. What a great trade on the 60-minute chart over here. Bingo. This is my primary trading time frame during markets that are, volatile. All right, they tend to do a lot better than some of the other time frames. So this is really good. You're not into trades that long, but they're really quick. All right, this one, however, if you wanted to get in early on this one, you would have gotten in way to the short side way long ago, and everything is red there. Okay, and the weekly chart is showing bearish momentum at this time. So I would not go long on this yet. All right, you'll have an opportunity later, but for right now, it's a short trader's paradise. Let me run over and do Starbucks here. This will be the last one, and I almost made it, but didn't quite for all of them. But on Starbucks here, about the only stock we looked at today. We looked at one more, of course, natural gas, that was better, but this is a bullish scenario. So out of all the stocks we looked at today, there's only been 2 markets that have been relatively bullish, so that tells you something. All right, so Starbucks here, 60-minute time frame, green PTF, daily green PTF, weekly green PTF, bullish owl, a little negative here. Okay, this one's a little more sensitive. We may not be done with this correction. It may head down a little bit more before going up, but that's all this is, a correction. All right, so it's got a high probability of taking out the high here. You're still in a wave 3 of some degree here. So no matter what happens, it's going to continue on. And of course, that's showing a breakout as well here on this channel. So Starbucks is bullish, okay, at this particular point. So it's looking pretty good. All right, this would have been our first entry down here on the 60-minute, unless you got in here much earlier. But that's kind of inside the channel, so you probably would not have gotten in there. All right, so that's it. All right, let's quickly take a look real quick here back, and then Don, I'll turn it over to you. I know I'm going over a little bit today. Here's a situation where a pre-market, markets went up now. The markets are open. All right, we just went above. You see this green bar here on the 2-minute. We just went above it. So we're in for a few price bars to the upside based off that. We have bullish momentum. Yellow PTF now. However, momentum's turned bullish on the 10-minute. So for you day traders, look to trade to the long side. Now, you got to be careful when you've had a gap, because sometimes we fill these gaps, but I would not short, okay? Stay to the long side if you're going to trade in the early market minutes, so to speak, over the next half an hour. All right, so that's it. All right, listen, everybody, have a good Turkey Day. All right, we'll see you back here next week. And Don, back to you. Thanks so much, everybody.
And like Bennett, I want to wish you all a happy Thanksgiving. Travel well, eat well, drink well, but stay safe. Have a great day.